the words don't impact him, but certainly some of the data points that he continues to point to as they maintain the interest rate steady for another straight meeting, saying the, quote, shock hasn't hit yet relating to tariffs, but also potentially an upcoming meeting between the United States and China could impact the markets as well. I want to give you a look at this as it was an up and down day, a roller coaster of sorts for what we saw in the afternoon hours just before markets closed. All right, let's bring into the conversation right now senior markets writer for Barron's, Paul LaMonica. Paul, thank you so much for joining us here on Live Now from Fox. A lot to get into in just a few short hours to close the day. The buzzword continued to be uncertainty with Jerome Powell. What did we hear from him, and why did the markets fluctuate the way they did?
Yeah, I think, Andy, that investors are as confused about what's next for the economy as the Federal Reserve seems to be. I think uncertainty, has replaced transitory as Jerome Powell's favorite word to describe economic conditions, and it does make sense. I mean, you can make fun of of central bankers for not having more of a clue than the rest of us, but when you look at how things have changed so rapidly with the tariff situation and how they could still change with an upcoming meeting with China soon between China and the US, there are legitimate questions as to whether or not inflation is a problem that's going to rear its head again and come roaring back, or if the Fed is to be more worried about a potential slowdown in the job market and broader economy, regardless of whether or not there's inflation pressure or not. I mean, I think everyone expects that the next Fed move is going to be to cut again, but it's just a matter of when, a question of when. It doesn't look like June at their next meeting next month that they're probably not going to cut rates there either. It looks like right now July is when they might make a move.
Yeah, and that's what Edward Lawrence, Fox's reporter there, was asking Jerome Powell if there could be a cut coming this year at all. Did he make any indication, any point toward that, or did he push that off to the future as well?
Yeah, he continued to note, I think, that things are so uncertain that they really have to take everything meeting by meeting. I mean, the Fed has stressed, and under Powell in particular, how data dependent they are. And I don't think that is going to change anytime soon. I think the Fed would rather be a little bit late with a rate cut than cutting perhaps unnecessarily. That could backfire as well. So Powell is going to take his time, and he also, brushed aside questions about his future, since it's, no secret that the Fed chair, his term ends in May of next year. And, it doesn't seem as if, President Trump wants to nominate him for a third term.
Yeah, there's a very good point. They continue to say and stress patience over being in a hurry to make any sort of these decisions. But they also said that some of the economy is in a solid shape despite some of the data. Do you think they're surprised at all that some of these impacts, they said the shock hasn't hit, and maybe the most apt word in that is yet. Do you think they're a little bit shocked that some of the tariff impacts haven't impacted the economy they thought they would?
I don't know if I would say that they're shocked. I think what they're really trying to do, because remember, when you look at that GDP number that we got, for the first quarter, that actually showed a contraction, a negative number on an annualized basis. What was very interesting was the Fed statement today opened up with an acknowledgement of some of the trade-related wonkiness in the GDP data, that because of what's happening with exports, that's one reason why we had that negative number, but they're not necessarily concerned that that's going to linger and be the possible sign of a recession to come. But you're right, Andy. We have had the job market has held up relatively well. Unemployment rate is still pretty low. I think consumers are talking a lot, and businesses for that matter, about how nervous they are and skittish. And we've seen sentiment readings fall. But, retail sales have been pulling back maybe a little bit, but by no means apocalyptic. I mean, we're not talking about a major negative slowdown for consumer spending just yet.
Yeah, that GDP certainly scared some people or concerned some people at least, but the other numbers, the other indicators are more stable, more in a good position. I do want to talk to you about the upcoming meeting between the United States and China as they continue to fend off. President Trump said when asked if there was any possibility of a deal being met between them, saying no, obviously putting a strong foot forward. How could that meeting impact the markets? How could that meeting impact of some of what we're looking at in terms of the data?
Yeah, I think that if there is any evidence that cooler heads are prevailing, and even if we don't walk out of that meeting with a handshake between Scott Bessent and the Treasury Secretary and his counterparts about a deal, I think the market is just looking for progress. They don't want a continuation of some of the really tough rhetoric and any sort of sign of maybe intransigence that there might not be any deal for a long time. Because again, make no mistake, I think investors are expecting that there might be deals with other trade partners that come a lot sooner, but China is really the main other global economy on the world stage that the U.S. needs to strike a deal with in order for there to finally be some more calm and reason, I think, on Wall Street, and companies and consumers can go back to business as usual.
And I want to ask you, and of course we talk about it, some of those trade deals they're proposed. President Trump said 18 or so. It might be fair to say that China is the linchpin to all of this, and we don't know what's going to come out of this, but that's a fair assessment, correct?
Yeah, I think so, Andy, because I think the other issue, a lot of people I speak to have been a little perplexed as to why maybe the Trump administration didn't try and strike deals with our, actual allies, Canada, Mexico, Europe, others first, and have a more strong kind of block that could act as a resistance to China, if you will, and maybe put more pressure on China to do a deal. I think that the concern on Wall Street is that the Trump administration has been so strong-minded about blasting so many of our trading partners as countries that have been ripping us off for years, that it sends this message that Canada's no different than China, and that's obviously not the case.
Yeah, that is a very good point. I think people pointed to that when the reciprocal tariffs initially came out, just some of the trade deficits versus what's going on in terms of trade, and the fact that maybe some aren't fully equitable in that term. Paul, anything else that you want to add? Because it was a busy day up and down. We talk about it, some of the black smoke in terms of the market, as we saw with kind of the Pope and the conclave. Anything else you're watching?
Yeah, I mean, tomorrow morning, we're going to get weekly jobless claims numbers. They're going to be very important to watch. They rose last week. If we see another spike there, that could, maybe have some people a little bit more nervous about the health of the labor market. We're going to get more, earnings to come. Anheuser-Busch, reports earnings. Shopify, giant e-commerce platform. Also, so there's a lot of data that is still to come this week. I think it's fair that the macro picture is what everyone's focusing on the most with all the trade headlines, but don't forget corporate earnings as well.
Yeah, those are very important for so many people. We saw Meta come last week with a promising number as well. All right, Paul, LaMonica, thank you so much. I appreciate your time. You're reporting at Barron's. We appreciate you.
Thank you. Thanks. Have a good one.
All right. Thank you so much. All right. Great conversation there, as it was an up and down day to close out the markets in terms of what we saw. The Fed deciding to keep interest rates unchanged for a third straight meeting, talking about how they're in, quote, solid shape, saying the big economic effects have not taken impact as of yet, and also the shock hasn't hit yet in terms of tariffs. We're also following the latest about a meeting between the United States and China. We'll see if a deal or any progress can be made there between those two nations in terms of tariffs. All right, I'm Andy Mack here on LiveNOW from Fox. One more time, a live look as the markets closed today, up 284 points, but it was an up and down day, almost dipping down into the red, but staying alive, boosting and buoyed by some of this news about the numbers. Maybe not as bad, a little bit surprised from the Federal Reserve that they continue to be so good. The GDP coming in as the economy slowed in the first quarter, concerned someone in the last several weeks, but obviously growing still in terms of the market. A live picture right now here as well at St. Peter's Basilica. The square there has emptied out as it's almost 11 o'clock local time in Rome.